Hey yo, what is going on, viewers of the tube? My name is Tyler and welcome to the channel that keeps your eyes glued to the screen better than in 1996, watching Demi Moore's first dance in the movie Striptease. Actually, I don't know about that one, but you know the drill. It's time for Chico Crypto. Well, not much has happened since the last time I did a little Tyler analysis of the Bitcoin price. The bottom support levels are still 100% in play from the analysis I did on October 8th. Now, the reason this range is so important is because back in May of this year, there was intense price action in this range as well. When the price first pumped, it went from 5K to 8K before correcting down to 7,300 extremely quickly, and then coming back to the 8K range. Thus, this 7,300 would be the bottom end of support. As we can see, back in May, the price then pumped up to 8,500 resistance, was rejected once back down to the 7,600 to 8K range, before pumping to nearly 14K. Thus, today we have three support levels, 8K, 7.6K, and then 7.3K. Any breakdown under this would most likely result in a quick drop, single candle down. Resistance is 8,500, and we need to push through this and stay above it to turn bullish. The reason I showed these levels first was because the last time I analyzed the price, Bitcoin was above 8,500, and it hovered above that for about 24 hours, turning from resistance into support. Quick pump to 8,600, and then support was broken once again. Thus, the price action is bearish right now. But there is still a chance to break 8,500 resistance and stay above it, moving to the next two resistance levels, which I analyzed just before the breakdown back under this 8,500 level. As we can see, back in late August, early September, there was a large dump, and back then the price hit 9,500 support. We broke down under that, and then on the day of the back launch, it was around here the major dump came, at 9,600. Thus, the next resistance level is 9,500 to 9,600. The next one would be 10K, as in early September before the back dump, we hit this support twice. Once on September 9th, and then a quick touch and bounce on September 19th, just before the dump. Thus, the two resistance levels to keep an eye on are 9,500, 9,600, and 10K. And here's the thing, I could tell you all of this just by looking at the charts and not using any of those tools and spending hours to come to the same damn conclusion. Per example, this Coindesk article, which comes to the same conclusions as me, but has 200-day moving average, 20-day moving average, a bearish outside bar candlestick, double bottom breakouts, 5-week moving average, 100-week moving average. Shit, why don't we just use the 100-year moving average? This is just plain out overdoing it in my opinion, but hey, it's my opinion and I'm sure there is some value in it, just not for me. Now for some important news, because China, Bitcoin, and crypto is about to heat up, big time. Now we know about the CZ, Binance, Alipay, WeChat, and Chinese crypto ban controversy. I highlighted it last week, and if you haven't watched that video, I highly recommend you check it out. It's in the description. But what was exposed was how crypto trading works over in China. As we know, China has a crypto trading ban. Exchanges and companies involved in crypto trading are not allowed within the borders of China. Anyone remember the 2017 China crypto ban? Yeah, that was when exchanges, Binance, OKX, Huobi, and more had to find a new home outside of mainland China. But crypto wasn't banned in China. You could still own Bitcoin and other cryptos. And this was further reinforced in 2018 when a Chinese arbitration court ruled that Bitcoin was indeed a property. And once again in July of this year, ruling Bitcoin is a property. So Bitcoin and cryptos are allowed in China, but how in the hell do they get them? And how do they sell them? Well, for one, Bitcoin mining is not banned in China, so you can get mineable cryptos in China legally. So it makes sense that China has a large presence in most of the popular mineable cryptos. Bitcoin always gets the heat, but this is true for almost all of the mineable coins, Ethereum, Bitcoin Cash, Litecoin, and more. So Chinese can get crypto through mining, but how do they sell them if trading isn't allowed in China? Well, of course, if you're rich and have the offshore connections, it's pretty easy peasy lemon squeezy. But what about the regular citizens of China? Well, here's where CZ, Binance, Alipay, WeChat, and even OKX and Huobi come in. I drew up this nice little map on Microsoft Paint to help explain it. WeChat and Alibaba have been hosting crypto trading services OTC and P2P through their applications. Exchanges like Binance, Huobi, and OKX and more pay the bribe to these companies to allow it. Now these companies, WeChat and Alibaba, are state-owned, thus the exchanges are bribing state officials. These lower-level officials most likely have to bribe someone in the central office, so it's hush-hush to the main boys upstairs. Well, dumb ol' CZ let the cat out of the bag and now is paying the price. Alipay and WeChat have been strong-arming crypto traders, blocking their transactions. So let's hear what Chinese crypto trader Chloe at JWL has to say about this.
Because once Alipay finds out the transaction is related to crypto, they will immediately stop the transaction and block your Alipay account. You may lose your money. So I think, in my opinion, what CZ did yesterday is actually putting the users on the risks of being blocked by Alipay or monitored by the government.
Give Chloe a follow for great updates. So CZ has put the entire Chinese Bitcoin and crypto trading markets at risk. Stupid CZ. But these moves are very important because China is getting ready to launch its own digital currency. There were reports earlier this year that it was going to launch by next month, but the PBOC shot that down as bank head Yi Gang said a series of regulatory issues need to be addressed before launch. But the fact is they're getting ready for launch, testing it, trialing it, and assessing it. This digital currency will hopefully push their RMB to world dominance, crushing the dollar, Libra, Bitcoin, and more. And many people are worried about China's dominance over the top cryptocurrencies, especially Bitcoin. Could the government just pull the plug on the mining farms, essentially crippling the Bitcoin network? Well, let's pull out the Bitcoin hash rate distribution chart. F2 pool, Chinese. Pool in, Chinese. Bitmain runs BTC.com and Antpool directly and owns via BTC indirectly. Thus, Chinese Bitmain controls 32.5% of the hash power alone. The only ones who are not Chinese on here are Unknown, Slushpool, which is Czech Republic, Bitfury, which is Georgia, Novablock, which is US of A, and Bitcoin.com, which is St. Kitts and Nevis. Based on pooling concentration, China controls 81.1% of Bitcoin mining. So what happens to Bitcoin mining once China launches their own digital yuan? Well, pool operators do not control the miners, and miners do not control Bitcoin. The consensus stakeholders do. So let me nip that argument right in the bud right now. Number one, having a pool does not mean having the mining hardware. The default behavior for mining hardware manufacturers like Bitmain is to mine their own pools. Many small miners do not change because they simply don't care, as long as they're being paid out. If there were an attack, they would, since it affects them financially. Thus, distribution is skewed towards China heavily, as most mining manufacturing takes place by the Chinese, even though those miners may be outside of Chinese borders. But just in case these pools get too gnarly and concentrated by a single region, there is something coming that effectively nullifies pool power. This is Stratum v2. So back in 2013, Slushpool, one of the non-Chinese pools, created the open source Stratum mining protocol, used by almost all mining pools today. Now they have announced the second generation, which allows single miners to create block templates and therefore pick transactions themselves and choose block versions, giving power back to the individual and away from the pool. And with the improvements that come with V2, it's a matter of if they don't implement it, the pools get left behind. So the final thing I would like to discuss is the fact that miners, governments, or a single whale or investor, they do not control Bitcoin. It is estimated between 10 to 14 million people own Bitcoin. These are the consensus stakeholders that control the network, and they are extremely distributed. If a threat was ever perceived, the economic incentives would fix the problem. Stakeholders would sell, providing a vote of no, crashing the price until stakeholders voted buy again. Cheers. I'll see you next time.